So last cycle, I started off thinking, I don't know what I'm going to do. I'm going to buy a large basket on top of my Bitcoin holdings. So I had Bitcoin, and then I had a large basket of 10, 15, 20 different names, thinking, well, these will work over time. My basket should work. It ended up being a wallet of shame. Most of those didn't work. I got a couple right, but they didn't really pay for the losses. It left me unfocused. I wasn't focusing on what really mattered. Try not to go too far out the risk curve into mid-size and smaller caps and hold a big basket of those, saying, well, the AI theme's going to play out and the meme theme's going to play out and the real world asset theme's going to play out. I want an allocation to all of these. It generally doesn't work. Honestly, it is not easy. So don't try and be a genius. Just let the secular bull market rise the value of your wealth.
The banana zone is officially here, marking the peak of every cryptocurrency bull market when prices surge dramatically and investors are caught up in a frenzy. Real Vision founder and CEO Raoul has been predicting this moment for months, and so far, it's unfolding exactly as he expected. Major cryptocurrencies like Bitcoin, XRP, Cardano, and Solana are soaring, and the Crypto Fear and Greed Index has been in the extreme greed zone since November 11th. While these moments are exciting, Powell warns that they come with significant risks, as many investors get swept up in the euphoria and forget the bigger picture. For Powell, the big picture isn't just about short-term gains like 30%, 50%, or even 100% rises in crypto asset prices, nor is it the expected quadrupling of the overall crypto market cap from around $3 trillion to $15 trillion by late 2025. Instead, he believes the real opportunity lies in the explosive growth of the market, potentially reaching $50 to $100 trillion by 2030. This, according to Powell, makes the crypto trade the biggest financial opportunity of our time. In a recent update on his Raoul the Journeyman YouTube channel, Powell stresses the importance of preparing for this massive moment to fully capitalize on the tremendous opportunity before us. He shares a few golden rules to avoid losing your investments. No leverage, no FOMO, focus on your main bags, and avoid over-diversification.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I love to see everyone there. Peace out.
I think you know by now the banana zone has started, and that's the silly season in crypto when prices start to go mad. And we have one job here, and that's not to f*** it up. And I'll explain a little bit about that. But first, the bigger picture. You see, we're on this journey. Today, crypto's a $3 trillion asset class, but I think it's going to $100 trillion by, let's say, 2032, 2034. So within 10 years, it goes to $100 trillion, which would be the largest, fastest accumulation of wealth in all human history. Now, my job here is to help you navigate that. I want you to all make it to the other side. I want you to make money and unf*** your future. You see, all of these things you hear me say, the banana zone, unf*** future, don't f*** this up, they're all part of the big thing, is how to navigate this megatrend. Many of you are newer to crypto. I've been in the space since 2013 and have learned many, many lessons. And so I want to talk a bit about lessons today, how I f***ed it up, maybe some misapprehension, some wrong stories about me, but I'm very honest in where I've screwed things up. And I think it's important to know. But first, let's look at the principles you all need to understand about don't f*** this up. I sent this tweet out in January 2024, and I maintain that this alone will help you. So this tweet says, remember, no leverage. So what that means is if you start borrowing money against it by using perps or other means, you have a risk of losing your coins if you get something wrong in a pullback. And then if you lose your coins, you're out of the market and you have this up. So please don't use leverage. Leverage is for experts and shorter term traders and people who really know what they're doing. Even then, I personally never use leverage. My job is not to lose my coins. Secondly, no FOMO. That's the fear of missing out. You see, when things get crazy in crypto, somebody on Twitter or one of your friends will be making more money than you. In fact, it looks like everybody's making more money than you and you don't have the right trades and you're feeling terrible about yourself. That is just the engagement trap that is Twitter. or the boasting of your friends. You don't get to see the trades that aren't working for those people. Now, really, what it's about here is not doing stupid things. So not suddenly FOMOing into a trade because something else is going up more than your coins. That's an easy way to lose money because you end up usually getting into a trend too late. It then reverses. You've then lost money. You then try and get back into your old trend, your old trade. That starts outperforming and so on and so forth. It's a mess. Don't do it. I've FOMO'd in many times into things that I shouldn't have FOMO'd into. Often it's been in a meme coin where I have a very low allocation. We'll talk about that in a bit. But often it's a friend calls me up and goes, you've got to get this one. This is so good. And for some reason, my guard is down. Now, I know I only have a very small amount of meme coin holdings or money allocated to that. So I can't do myself that much damage. But I suddenly get excited. I got an email a few months ago from a friend and client of mine said, hey, you've got to look at this thing. It's amazing. I'm fully loaded up. This is really cool. And I'm like, oh, yeah, this looks really cool. Now, I'm shit at early stage stuff, but here's me thinking, yeah, I'm going to follow this guy. He's really smart. Obviously, I lose 70% of my money in that trade. I then did it again recently where somebody came on and said, listen, this is a really great idea. I have a history of doing that. I did it in the last bull run several times. So please don't FOMO. You will lose out.
The collapses of Celsius, 3 Arrows, and Voyager in 2022 serve as a stark reminder of the dangers of leveraged positions, particularly when taken without professional experience. While the allure of 50x to 100x leverage might seem enticing, it's one of the quickest ways to lose your coins. PAL frequently cautions retail investors about the risks, urging them to fully understand the implications before engaging in leveraged trades, especially in the volatile cryptocurrency market. Although PAL isn't opposed to leverage altogether, he emphasizes that it should be used with caution. Leverage can amplify gains and lead to significant returns in favorable conditions, but it also increases risk. He stresses the importance of proper risk management, including position sizing and having a clear exit strategy, to avoid devastating losses during market reversals. For most investors, PAL recommends avoiding high leverage unless they have the expertise and capital to manage potential losses. Instead, his advice is to focus on building a diversified portfolio with minimal leverage, which will provide a safer and more effective strategy for navigating both bull and bear markets.
Another really crucial one is only have 3 to 5 of the top assets in your main holdings. This is to de-risk. You see, the space is going to go up plenty. You don't need the fastest horse in the race. You need just good, fast horses. So for most people, just Bitcoin is good enough. Or maybe you want Bitcoin and Solana, because Solana has been, the blockchain with the most network adoption this cycle. Or maybe you have Bitcoin, ETH, and Solana. And then maybe you want to go a little bit further out the risk curve, whether it's SUI or Celestia or Say or whatever that one is for you. But remember, don't have that as your main holding because, again, we don't want to this up. And the others are proven over time. They have Lindy effects. They survive. And I want you to survive. So don't have this broad portfolio. Now, I've done the broad portfolio trade as well. And that one up. So last cycle, I started off thinking, I don't know what I'm going to do. I'm going to buy a large basket on top of my Bitcoin holdings. So I had Bitcoin, and then I had a large basket of 10, 15, 20 different names thinking, well, these will work over time. My basket should work. It ended up being a wallet of shame. Most of those didn't work. I got a couple right, but they didn't really pay for the losses. It left me unfocused. I wasn't focusing on what really mattered. And it was my Bitcoin bet and then my switch into Ethereum. That was a big bet. But that wallet of shame is something you'll all go through, but try not to do it. Try not to go too far out the risk curve into mid-size and smaller caps and hold a big basket of those saying, well, the AI theme's going to play out and the meme theme's going to play out and the real world asset theme's going to play out. I want an allocation to all of these. It generally doesn't work. Honestly, it is not easy. So don't try and be a genius. Just let the secular bull market rise the value of your wealth. The other thing here is self-custody. You see, exchanges can blow up. Now, we've got much bigger exchanges and they're super high quality. Coinbase and Kraken, etc. They've proven themselves over time. But generally, the magic of crypto is it's an asset we can self-custody. So that means nobody can take it away from you if something goes wrong. And I think that's one of the key use cases. Now, if you're new to crypto, don't worry about that yet. First, buy your crypto, store it on an exchange, and then go out and buy something like a ledger device and figure out how to use that. That stores your passkey for your crypto in a safe and secure way, so nobody else can get access to it. But again, you need to be really careful where you store your seed phrase that gives access to that. But what it allows you to do is it becomes portable. So if you have to leave a country, have to move around, you can then hide the seed phrase, hide the ledger device, and you're in control of your own assets. That's a really key thing. Having been through the European crisis where they took all your money out of the banks, I think self-custody is incredibly important. You may not think so now, but one day it will be. You know, people lost a lot of money holding it on FTX, for example. Again, that's the reason I like self-custody. Now, for those of you who have more tokens, then you get into a multi-sig world where you have multiple signatures, so nobody can move it without a consensus group of people agreeing to that. So that's the next stage forward, whether it's Gnosis or a number of others that allow you to do that. So those things are important. Don't lose your token.
Bitcoin surged to a new all-time high on Tuesday, breaking records with a price of $93,965. The leading cryptocurrency rose 3.3% against the US dollar over the past day and has climbed 7.5% this week, bringing its market cap to an impressive $1.86 trillion. This price rally was driven by strong trading activity, with $84.7 billion worth of Bitcoin changing hands within just 24 hours. The surge also had an impact on the derivatives market, triggering the liquidation of $44.4 million in Bitcoin short positions. Analysts attribute the latest price jump to growing institutional interest and excitement around regulated trading options, particularly BlackRock's IBIT Bitcoin exchange-traded fund. Bloomberg ETF analyst James Sert noted that IBIT saw $1.9 billion in notional exposure on its first day of options trading, which he believes played a significant role in the price surge. With approval for Bitcoin options trading now in place, prominent investors, including Michael Saylor, are optimistic about the future of Bitcoin, especially in light of the approval of the IBIT ETF. Sert anticipates that other ETFs will be approved soon. With these developments, the question remains, could this be the catalyst that pushes Bitcoin to 6 digits? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.